Up next, we're going to be having another fireside chat, the Inflection Point, highlighting Africa's digital opportunities. So that promises to be very, very interesting as well.
Good afternoon, everyone. I think I am the last, we're the last panel before we go, so hopefully everyone stays and hears about this report that Tosi and I and a couple of others wrote about the digital opportunity in Africa. What I'm going to do is ask the panelists a few questions, and then I will open it up for the audience to send questions as well. One of the things that we saw when we were doing the reports, we interviewed investors, we interviewed operators, was that across the board, everybody is very, very excited about the opportunity that digital has to solve problems for Africa. We actually sized and quantified the opportunity, said it was about $700 or $800 billion. There are so many different verticals where we see the opportunity to use digital to solve problems. And I'm really excited to talk to Okwe and Kanyinsola this afternoon because I think they both represent companies that have used digital to solve the problems we have in financial services, which is a problem very dear to my heart. So I'm going to start and ask Okwe to sort of tell us the journey that TeamApt has gone through in terms of using digital to solve the problems that we have in financial services today.
Thank you very much. Hello? Okay. All right, thank you very much. So essentially, I would say, just to simply put it, the vision of TeamApt is to create financial happiness for businesses globally, right? And what we have done so far, I would say we started out in 2015 as a bootstrap company, and the approach that we took, because it was really early days, was to go through the banks, right? The banks and the financial institutions that existed at the time. And what we're essentially doing was building out back office softwares that will basically help them, I would say, digitize their operations just digitize their operations and basically streamline their operations as the case is. Running through this over a 3-year period, we had covered about 27 financial institutions. Thinking about the entire run rate, the entire period, covering over 27 institutions, what we had only done was covered about 10 million users, right? So we're only scratching the surface. So it was at that point that we realized, hey, we actually have, we have a lot of work ahead of us, in the sense that the market or the addressable market is really large. And what we decided to do was to basically create solutions to go after the market directly, right? So we created Money Point as well as Monify. Money Point being a business bank that provides banking services, credit services, as well as business operation tools for businesses globally, and starting out with Nigeria. Monify being a payment processing solution that basically helps merchants process payments offline as well as online. Within 2 years, we had, essentially almost 50x what we had covered in 3 years, starting with the route through the banks, right? We have covered, we're currently servicing about 400,000 businesses, processing north of $9 billion monthly. So far, our solutions have basically been used by about 50 million users, right? Just to show you, how big the market is and what the potential looks like.
Thank you very much, Okwe. Kanyinsola, I don't know if you can see what's happening. I don't know what you're looking at.
I can see you guys okay. Can you guys hear me?
We can't hear you, guys. Can you speak again? We can't hear you.
Yes, I can hear you loud and clear. Can you hear me now?
Wonderful. So, Kanyinsola, you work at one of the 1% of companies across Africa that's actually raised a Series D round. I think it'd be interesting for us to hear the journey from sort of pre-seed all the way through to Series D and what that looked like.
Yeah, awesome. Happy to share that. It's very nice to have a conversation today. I'm really excited about the the topic as well. We are in payments. We are, we're about funding. We are about growth. We're about technology. So just to give a quick journey of how Flutterwave started, as a lot of people know, we started back in 2016, and the drive behind Flutterwave was to find an infrastructure or to build a technology that would seamlessly bring together all the different forms of payment methods that we have, within the country. So one thing that we had realized when we started the business was if I wanted to send money to a cousin or a friend in Ghana, I would have to go to my bank, fill out paperwork before that payment can be made. Even filling that paperwork, that wasn't the, that wasn't the end of it. That money would first have to go through Swift, which typically is based in New York. It'll take a couple of days for that payment to first get there, and then Swift will now send it to Ghana, right? I could easily take a 1-hour flight between Nigeria and Ghana to go give my friend that same amount. So we thought about building that technology infrastructure that would make it simpler, right, for an individual or for a business to make this type of payment transaction. So over the years, as a payment business, we've sought ways to make every channel. So as you're thinking about your business, as you're thinking about the user flows, as you're thinking about the opportunities, we wanted to make sure that at that main point, at that core point, and as you're thinking about payments, Flutterwave is that gateway that you're going to be looking at. So whether that is through cards, whether that is through alternative payment methods like USSD or QR codes or bank transfers, right? We have built that technology where you are staying within the same ecosystem and not having to worry about integrating multiple different providers. Now, in terms of growing our business, right, we know that our technology is very infrastructure based, right? And to deliver on the efficiency, on the value that people know us for today, we needed equity, right? We needed capital, right? So that put us in place of joining YC, right, which is an accelerator program where we were able to connect with some investors in the earlier days. Following that, we raised our Series A round, Series B, Series C, Series D, which we raised at the start of this year. So as you can imagine, with each fundraise that we did, our goal was to improve on the technology that we were delivering to our customers. When we started, we were looking at just Nigeria, right? But then over time, we're like, okay, you know what? This problem that we're looking to solve is not just restricted to Nigeria. We need to look at other markets, right? So that's us expanding into other markets like, South Africa. We're looking at Uganda, we're looking at Rwanda, and so on and so forth, connecting the Africa infrastructure, bringing Africa to the global economy and connecting the global economy into Africa. So, today we're valued at over $3 billion. It's from the hard work of everyone at the company, right? From us processing transactions and from having a team that is bought into the vision that we have.
So I'm going to come back to you because you've talked about raising from seed, the YC stage, and all the way to Series D. I think what people might be curious to know, though, in the journey is, did the game change in the later fundraising rounds? Because I don't think there are very many companies in Nigeria and Africa that have gone all the way through to Series D. So what sort of changed, or how did the game change as you went from sort of YC all the way to Series D, which you guys raised earlier this year? And I know you've been involved in quite a number of the rounds.
Yes, so I think at the beginning, right, what we were looking to do was to get equity and get investors on the cap table that would help us scale the technology. But as we started to grow our business, right, so take for example in Series B, the focus was to grow the infrastructure that we had, building that connection into more markets. In Series C, that focus was also getting the right investor that would help support that infrastructure growth, the geographical growth that we were looking for, right? But also not just for the check. So at that point in time, we were being more strategic in the terms of investors that we were having conversations with. We just didn't want someone that would give us a check. We wanted someone that would be a strategic partner for us, right? It was with that Series C round that we were able to build on our partnership specifically, and we got strategic partners such as PayPal, such as Visa to join our cap table, right? So at that point, we're looking for, global brands, right, that we can work with, that would be associated with our business, and that we can also leverage as we're thinking about the next level of scale that we had. For our Series D, similar part, we were thinking more strategic about who we would have on our cap table. So not just we're moving at that point from the check side to the type of investor and to the value that we can get from those investors. So that's what we are currently leveraging today. Even as we're having conversations with the investment community, it's about the value proposition, right? And not, monetary value is good, but non-monetary value about what that partnership will entail for us. So that's kind of the stage where we're at today.
I like what you said around it's about the value proposition of the investor. So there's almost a two-way process now as you move forward.
Yeah.
Opa, let me ask you a
Exactly.
question around the digital economy, because we saw a lot of excitement about it. But one thing where usually my clients always argue with me when I tell them this figure, they say it's a lie, it's not possible, is that in financial services today, I think across Africa, less than 15%, and I'm being very, very generous, less than 15% of our transactions actually happen digitally, and the bulk of it is cash. So, is this whole talk about the digital economy much ado about nothing? How do you think about that in the space you're in today?
So I think, first of all, the way I would say, analyze opportunities is based on a framework called RRW, right? So is the opportunity real? Can we win? And is it worth it, right? So is the opportunity real? It definitely is real. When you think about the business impact companies like ours as well as Flutterwave, and a whole lot of companies that started out, give or take 5 years ago, have achieved over the past couple of years. It's very clear, without a doubt, that the opportunity is real. Can we win? Well, winning is subjective to the company we're speaking about. So at this point, I'm not going to be sharing any information on whether we can win or not because, it's trade secrets, right? But the last part is it worth it? After going through the first two, if everything checks out, the last thing you want to ask yourself is it worth it? Should we actually embark on this journey or not? And it's very clear, just even looking at the Endeavor report. The digital economy right now in Africa is worth, I think, north of about $100 billion, right? Based on, professional market sizing. And it is projected to reach north of, I think, $500 billion in a couple of years. And the reality is that we're already getting a piece. We're already getting a piece of the pie. We're already seeing what this looks like, and we can see the potential as we scale across the country as well as scale across other markets. It's really, really interesting from a business impact point of view. And I think that on the second hand, which is, I would say, the macroeconomic or microeconomic impact, what you also see is a lot of people actually desire for better for themselves, right? And by virtue of looking at the person who is right beside you, who is doing something for themselves, which is, just as an example, participating in digital economy, getting access to jobs, getting access to, just think about, people who, for example, ride bikes to deliver an order from VI to Ikeja, for example, right? This guy, prior to getting that job, was probably earning, give or take, maybe 10,000 naira on a monthly basis, doing whatever it is that he was doing. But just by mere virtue of participating in digital economy, this guy is able to 10x his income, right? It's real. People are saying it, and people are beginning to want to participate in this opportunity, as the case is.
Sorry, I'm going to ask Hello, fantastic. I'm going to ask a random question. What did you do before you joined TeamApt? Were you a
Oh,
consultant?
no, I wasn't.
Okay, because you are
But I
using
mean,
acronyms.
but I mean, you can say I was. I mean, I kind of started out as a solutions architect, so basically consulting for businesses across different industries. So telco, basically just deploying technology solutions for businesses in these industries.
Okay, so you said RRW,
Yes.
real, is it, can we win? Is it worth it?
RWW. Yes.
RWW.
Is it real? Can we win? Is it worth it?
Fantastic. Let me ask you a question though around how to actually, so you agree, you say the opportunity is real, and you agree that, it is worth it. What can folks begin to do to actually harness the opportunity? One of the things that I think about a lot is the fact that we see all this growth in payments. Let's even just take Nigeria today, and we see across some verticals 600, 700% growth, but we're still scratching the surface. But if it was easy, a lot of people will be doing it. So how do we think about capturing that opportunity that we see with digital payments in Nigeria?
Okay, so I think that, first of all, I mean, a lot of folks are already doing stuff about capturing value, right? And I think the bone of contention really are, I would say, the barriers that hinder skill, right? The barriers that hinder skill. There are companies that have figured it out, and these are companies that, are processing billions of naira and dollars as the case is. And you have companies that are just starting out, right? I think that generally the barriers that we face can be broken down into two. So one is access, and the second is trust, right? So the first being, when I think about it, one of the things that's majorly responsible for, I'll say, the growth that we're experiencing is basically just the sheer size of the population on the African continent, right? But a majority of these people a majority of us are essentially living below poverty. And what that essentially means is we're unable or they're unable to participate in the digital economy. And participating in the digital economy can literally be narrowed down to just access to tools, information, and resources, right? Access to a smartphone, for example, is literally, access to a smartphone and the internet is literally the difference between someone who is participating and someone who is not, right? But when you think about, how much these guys are living on a daily basis, right? You have people that are living under, for example, $1 a day, right? And the average cost, for example, of a smartphone might be, give or take, between $50 to $60. What that essentially means is that this person will need to starve for about 60 days to afford a smartphone. So that's one of the problems that I see that we face. And I think one of the things that we can do is essentially reduce the cost or reduce the barrier to entry, reducing the cost of participating in the digital economy.
So the cost for the consumer?
Yeah, the cost for the consumer.
Okay.
Yes.
Okay.
I also think that, on the second note, which is trust, as a lot of people are participating in the digital economy, obviously, there are stories and tales to tell. And people are moved by customer testimonials. Like, what are people saying about what they are seeing on these platforms, right? What you see today is that people don't just trust digital platforms for various reasons. You're not sure about who you're engaging, right? You don't know if the person you're talking to or the entity you're relating with is who they say they are. You're not sure about the quality of the goods or the service that you're going to get. You're not even just sure about the infrastructure generally in itself, right? So what you then begin to see is, what we have to do to basically accelerate that is to ensure that people can trust these platforms a lot more, right? Verify the identities of people that they're having conversations with or they're having dealings with, as well as, I would say, just ensuring that the platform works, right?
Awesome.
Exactly, at all
Thank you.
times.
Yeah. So I'm going to ask you this question next, which is, we agree that the opportunity is there. We agree that we can harness the opportunity, but that opportunity requires capital to go after it. Africa has bucked the trend, at least so far, in terms of the amount of funding that has come into the markets in 2022, unlike the rest of the world. I think we've grown, whereas if I look at the US, venture funding has declined by 25%. So what would you say to investors, about the opportunity in Africa, and how should they think about, why they should put their money here?
I think it takes very little to convince them right now, because if you look at it, the spotlight is on Africa, right? You just said it now that compared to Europe or Latin America, the volume of investments in Africa is has more than doubled. Think about it. In 2020, I think the funding that came into Africa was about 1.2 billion. In the first half of 2022 alone, that doubled, and I think it was around 3.14 billion, right? Most US VCs who were not thinking about Africa, but because of companies like Flutterwave, companies like Cheaper Cash, companies like Paystack are now looking at Africa, right? They're seeing Africa as the green land, right, for investments and for higher returns, right? And as what we've been talking about, there is that talent, there is that sheer number of people within the ecosystem, within the African ecosystem, that can develop new solutions, right? A lot of things, because any new solution that you come up with, essentially in Africa today, like you will see almost like if you're building it correctly, like you will see great returns for it, right? So investors are really keen on that. One, because they can also see higher return for the investment that they're going to do compared to making that same type of investment in Europe or in Latin America that is more developed. So it's also the current ecosystem that we have in Africa today, in the sense that we are still developing, almost developed. So any investment you make within that ecosystem, you're likely to get a more than average return for it. So that is also another motivation for investors to look at the continent as a whole. I mean, and then you're thinking about all these multinationals, for example, Google, right, that are committing to investing funds within the continent as well. I believe that they had promised a $1 billion investment plan into startups within Africa specifically, right? So, and all of this, by the time you put all of this together, you see the opportunity that the African continent has to attract investments, to continue to attract investment, right, going forward. So even though there might be a law right now, investors still have at the back of their mind that this is a greenland, an opportunity for growth, and an opportunity for a return on their investment. So looking at Flutterwave specifically as well, right? When we started out, the funding that we'd raised from Series A through to D, we had more and more interest, right? The number of investors that we were talking to at each round of, at each funding stage that we were looking at. So that also kind of, from our own insider perspective, is there is that keen interest in Africa, in businesses in Africa, in digital payments, in startups within the ecosystem. Yeah.
Wonderful. You mentioned something that I have to hook on, which you said investors like high returns on their investments. And do that is through exits and so on and so forth. But we don't have a lot of that within our ecosystem. What is your outlook for, as we mature, what is your outlook for what exits will look like for investors in this space today?
That is a two-way street. An exit for some people is having a larger corporation buying them out, right? Being embedded in an M&A type of transaction. Another way of exit is, on the stock exchange, right? In Africa today, I believe there's only about 4 of them, right? And I think the market cap for them, it's about 300 billion or so. So a lot of businesses that are looking at exits today are thinking of either of those opportunities, right? Either be embedded in an M&A transaction or to, go into the public public market. And then as you're thinking about the public market, you also have to consider like which of the public markets available to you would you want to do that in. So I think that as we continue to explore these opportunities and depending on what the strategy of that investment or what the founder is doing, they can explore either of those options as they're looking to exit. And like I said, growth is very important, and growth has been seen, like, a lot of people are seeing that across whether edutech or health tech or fintech, whatever the case is, there is that growth, there is that market opportunity, right? We haven't reached saturation yet in any of I don't believe we reached saturation yet in any of the industries that we're operating in today. So those opportunities are on the horizon. I believe like in the next few years, we'll start to hear more conversations around, larger M&A transactions, such as the one with Health Plus and that company in South Africa, or, the story with financial services as well. And we're going to start seeing more opportunities like that. So I think it's something that we can look forward to, right? And as we continue to progress on our own part, we'll continue to develop solutions that would help some of these larger enterprises and all of these other stakeholders to operate within the continent.
Thank you very, very much. Let me open up to the audience for questions.
We do have questions, but unfortunately, we are way over time. So I want to give a round of applause, please, to our moderator and our panelists. Thank you so much for a very, very interesting conversation. Really do appreciate it. Thank you very much indeed.
Thank you, Kanyinsola.